The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, a very warm welcome to the post-FOMC edition of Squawk Box Europe with Juliana Tattlebaum and me, Steve Sedgwick, and these are your headlines. So Jerome Powell delivers in line with expectations. Maybe a dovish tilt, maybe? Anyway, as the FOMC makes a long-awaited rate cut, long-awaited for the president, that's for sure, amid labour market concerns.
We remain well-positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks.
President Trump soaks up the pomp and ceremony on the first day of his UK state visit before attention today turns to bilateral talks and a business roundtable with the Prime Minister. And investors count down to a likely Bank of England rate hold, with attention focused on whether policymakers will cut the pace of bond sales.
A very good morning to you.
Good morning.
You look nervous.
I am nervous. You've been talking about a gag that you've got lined up.
It's just that as delivered, 25 basis points. You're going to hear it everywhere. Same old story everywhere as well. You know, was it a slightly dovish tilt? Yes, I think so. There was a whole host of reasons. Goldman's has put 5 reasons out there why it's a dovish tilt. But I love a good book. You know, I'm a great reader. Well, as in I did, I'm sure, or movies, whatever. And the greatest crime writers, the whodunits of this world, right? I mean, who are they ever in history? Agatha Christie? Yeah, I think she's up there. Conan Doyle, Sherlock Holmes, yeah. Raymond Chandler, you know, Philip Marlowe. I think they're probably the greatest 3 whodunit writers. The Fed is not going to get a look in as one of the greatest whodunits of all time. What am I talking about? Who knows? But let me show you the dot plot, because somebody, and we don't know who. Now I know, viewers, this could be the most boring chart you're looking at of all time, but it ain't. It's so exciting, because if you look at those columns, the column on the far left, you got it? Okay, that's the one that says to the end of 2025, start of 2026, what the dot plot's going to be as well. And please bear with me. You've got the column on the left, and you've got the one dot, then was it 5 or 6 dots, then you've got another couple of dots, then you've got more dots, and then suddenly there's a dot way out of line. What is that dot? What is that one solitary, lonely little dot all on its own? Who done it? Come back to we'll get off that chart. It's too boring for you. Who done it? Who is that one solitary little baby dot all on its own? And what does that dot represent? I'll tell you what that represents, because we're now expecting
Put us out of our misery.
Everybody knows anyway. I'm just building up. And Alex Morris going, can we get to the sensible stuff? He's waiting. So those other dots represent 2 to 3 rate cuts more for the end of the year. You know? So 3 in total seems to be the median as well. But somebody's gone for rates as low as 2.875 as a midpoint for the end of this year. Who done it? Have you got any ideas, anyone? Any of you out there? Has anyone got any idea who the lady or the gentleman was? Is it Lisa Cook?
Perhaps a recent appointee?
Is it? It's not Jerome Powell? Who is it?
I think it's the latest Fed member.
Tell him who it was.
The only dissent of the meeting.
It's not Mr. Myron, is
Stephen
it?
Myron.
Shocking. The president's man went for 2.875 by the end of the year.
You've managed to put together a beginning, middle, and end to a mystery in the first 3.5 minutes
Conan
of the show.
Okay, let's
Step
move
aside, Agatha Christie.
Yeah, who's she? The US Federal Reserve delivered a widely expected 25 basis point rate cut yesterday and signalled 2 further reductions before the end of the year. It comes amid concerns surrounding the weakness of the US labour market and was characterised by the chair, Jerome Powell, in his post-decision press conference as risk management. Right, the committee voted 11 to 1. The plot thickens. 11 to 1 to lower rates by 25 basis points. There was less dissent, actually, than expected. Yeah, Bowman and Waller, they were in line behind the Fed chair. Oh, my goodness. Hadn't expected that. What a plot twist. But Trump appointee Stephen Myron, we're calling him Myron now. I've been calling him Mirren for ages, but our US colleagues have been calling him Myron. So here we go. not Helen Mirren, Stephen Myron, was the only member not to back the cut, instead calling for, you guessed it, a larger 50 basis point reduction. Now, in terms of the path ahead for rates, we might have already had a look at this fascinating chart. For once, it is fascinating. It's called the dot plot, the summary of economic projections of individual expectations showed divisions amongst the committee. Now, we don't know who's dots who, but we got a really sneaky idea, we think. Forecasts range with the majority of participants seeing either 1 or 2 more rate cuts this year. As I may have mentioned, one member did not want any cuts, but at the other end of the scale, and this is the point, one thought we should have 1.25 percentage points in further reductions this year. Wow, we think we know who that was now, don't we? Because we're good at this crime writer stuff. In his press conference, Powell outlined the need for the Fed to balance its dual mandate.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate.
And speaking to our US colleagues, Double Line Capital CEO Jeffrey Gundlach said a 25 basis point cut is the right move, but warned on the path ahead.
I think there's a risk there of over-easing. I hope that they start focusing, and I think they will if I read carefully into what Jay Powell said. They need to look at the unemployment rate more than the jobs creation. It always used to be the jobs creation. But now with this negative immigration and with the downward shift in demand for jobs, supply for jobs, I think we really need to focus on the unemployment rate.
Now, in terms of the market reaction, we had some interesting moves in equity markets. We had been hearing for the weeks leading up to this decision that equity markets wanted to see a rate cut. This would be a tailwind for the equity rally to continue. And actually, yesterday, we ultimately saw the S&P 500 end lower. The NASDAQ also retreated over the course of the session. Initially, after the decision, the S&P 500 moved higher, but then turned lower to end the day in the red. The Dow Jones did manage to add about 260 points over the course of the day, or 0.6%. The dollar also interestingly rose despite the Fed cutting rates by about 0.4%. That was the dollar index. Now, in terms of Asian trade overnight, here's the early picture. You got mixed trade there. The Nikkei 225 up by 1.3%. The Kospi over in Korea also doing well, up 1.24%, but pullback of about the same magnitude in Hong Kong, with the Hang Seng down 1.5% now. The Shanghai Composite in mainland China trading off by about 0.25%. As for Europe, yesterday, European markets closed out before the Fed decision, of course, so ultimately Stoxx 600 ended the session flat as investors awaited that news. And now this morning, we're looking at a bounce in the Xetra DAX of about 0.4%, muted start for the French and UK markets, and the FTSE MIB over in Italy, which underperformed yesterday. That index dropped about 1.3%, is poised for about a 16 basis point jump at the open at this point in time. Now, in terms of U.S. futures, what's in store for today's market open? We're looking at gains across the board. Investors now have had a little bit more time to digest the Fed communication yesterday, and we're looking at all three of the majors opening higher.
Thank you very much indeed. Well, let's get to Alex Morris, CEO and CIO at FM Investments as well. He's been waiting patiently in the wings. Well, it was no Hounds of the Baskervilles. It was a pretty tight script, apart from that one dissenter. But even that, I think we probably knew was coming, Alex.
Oh, I think we did. And I think the story here, I don't remember my childhood reading of Sherlock Holmes that well, but it was Silver Blaze and the dog that didn't bark. And that was really kind of the story here. We expected Stephen Myron to come in and do exactly what he did, and did so in sort of odd fashion with all of the palace intrigue he created on the way in. But at the end of the day, Jay Powell, who's not going to win any awards for audiobook announcer of the year for sure, did a good job of delivering a fairly monotone, fairly unanimous, otherwise than expected committee, which, given all of the backdrop that came into this meeting, that was a pretty miraculous outcome for him.
Alex, I have to commend you for your willingness to play along with Steve this morning. I think my spot as co-anchor is at risk after you running with his analogy there. Alex, how would you categorize the communication, the tone from the Fed? Steve was just saying how Goldman has come out saying that they think this was a dovish communication from the Fed governor. But I've actually heard the contrary, that actually this cut should be seen as a hawkish cut, given the communication around it being a risk management move. How would you categorize it?
I'll disagree with our Goldman colleagues here. I think this was a hawkish cut. Jay Powell went out of his way to point out that all of the tensions that are happening, right, trying to mask some of the political drama behind the scenes. But this was a risk management move. There was some immediate pricing in of 50 basis points going into this. We didn't think that was likely to come to fruition, but certainly a lot of insurance taking out that was had in the last couple of days. But overall, every time the Fed governor goes back and just tries to tell you about the mandates and explain, this is my job description, that's not where someone telling you there's a very clear direction of what we're about to do. That's someone saying we're trying to do the bare minimum that we can do in an effort to not do too much or too little. And this is just the consensus net decision. You also see that in dispersion. Aside from the one lone dot, who could it have been? And some dots are a little higher. We are seeing a tremendous dispersion of those dots versus some of the tighter clustering we've seen before, and actually a slight increase to the sort of implied R star that's going to come out of this meeting. So all of that leads to the same conclusion. This was a very clear, easy 25 basis point cut, but it was a hard anything else, and anything read beyond what will happen the next meeting is maybe 25 basis points would be a tough call.
Is that how you explain the pullback that we saw in U.S. equities yesterday? Obviously, very marginal in terms of the move lower in the S&P and the NASDAQ. But given that so many investors have been talking about this being a tailwind for equity markets, it is notable that equities actually pulled back on the back of this announcement. Is it because of the relatively hawkish takeaway, the interpretation?
Certainly, the press conference talked equities, off some of their initial sugar rush that came on the actual print. But I think some of it really did a fair job to tell equities, look, we do have the helm here, because that press conference could have easily, and probably a year ago, would have sent equities down 100 or 200 basis points further than they went off of their highs right after the printing of the numbers. I think we should also look at the bond market. We would normally expect yields to stay flat or go down. And instead, we saw just a general 5 to 6 basis points rise, more or less across the curve, a little steepening with the 30-year running a bit further. But the market pretty well digested this. And I think it's because most market participants, 90-some odd percent, 95 plus, expected 25 basis points. And all the gyrations going into it 48 hours before just weren't enough to move the market off of that consensus opinion.
Alex, I don't know who the Moriarty is in this tale of excitement as well, and I'm going to leave that one standing there for viewers to make their own mind up. But in terms of Waller and Bowman as well, they also were potentially not so much the dog that didn't bark, but they came into line behind the Fed chair. And was that significant about future battles and about future independence of the Federal Reserve?
I do think it shows that they were trying to point out they can be consummate Fed governors, and they do have to work with these colleagues over a longer period of time, perhaps longer than Jay Powell has to. So it became necessary to fall into line. There really just wasn't enough evidence to become 50 basis points. And deep down, they are economists who really do respect that job. It was also made a little bit easier when we immediately had the known dissent. I think it would have been hard for unanimous 25 basis points. They needed someone to say, maybe we should think about doing more. They had their foil in Stephen Moran to do that, but they could now fall into line where they probably actually wanted to be.
Yeah, really interesting. Okay, look, we've been showing the dollar index, which obviously the dollar's been falling on this one. We've also been showing the longish end, the 10-year as well, just over 4% as well. We've got two really good views going on out there. One, the steepener continues. Two, actually, the long end is significantly undervalued and you should just be buying it now. Obviously, they're not necessarily counter, but they tend to run in the same direction. What are your thoughts, sir?
I think it makes sense to be buying the bond here in the 10-year. There's probably some pressure to bring yields down for a while, and net, it's always hard to turn away from the 30-year when you're getting 5% on it. This seems to be some natural floors that tend to happen. There are some absolute risks to the upside here, but it seems that the Fed has done a good job of communicating policy. Jay Powell's description of path dependent sort of right and looking at where we're headed being more important is being absorbed. So I think you're probably safe there. But let's not forget, we saw 25 basis points, and we're probably going to see a few more. So if you're uncertain, sitting at the short end of the curve and collecting 4%, maybe a little bit less now, is still pretty good. And if you're worried about that, look backwards in time 10 years and remind yourself what it was like to collect zero. So that's probably a safe place to be more or less across it. But certainly adding some duration feels like a good bet today.
Alex, given next year the composition of the Fed board is likely to change, obviously Jerome Powell's tenure is up, and the expectation here, given everything that's come out of the White House, is that it's potentially going to be a more dovish-leaning Fed. How much weight should investors actually be putting on the dot plots at this point?
Yeah, I think you have to look at it as indicative of where things are going to go. And it's going to take a little while for a new, more dovish operation to really put its mark on things, particularly if the Fed does deliver another 3 cuts before that happens. That does seem fairly reasonable. Jay Powell will lose his chairmanship, unknown if he'll actually leave the board. And there's some importance there, because if he were to leave, the president would now have the ability to more or less hire or fire regional presidents at whim, which would really change policy substantially more than the governor's ability to do so at their sort of 8 regular meetings throughout the year. But, you can look at all of that and say anything with the president, whereas presidential appointment powers is sort of unable to look more than 30 days over the horizon. And 30 days might be a stretch, frankly. But I think you have to give it the same weight you did last month and the month before until that opportunity strikes, until the president takes it. And stranger things have happened than the president changing his mind.
Alex, I love your commentary. We've done all the serious stuff now. Because you played so beautifully at the start with my analogy about Sherlock Holmes, I'm going to give you a quiz question. You could either be in another life Sherlock Holmes, Hercule Poirot, Philip Marlowe, and I'm just going to chuck in the wild card, Columbo. Who would you be?
Oh, that's a tough call. I think you got to take Poirot. I mean, the mustache just plays.
Yeah.
And I'd never be able to wear it.
Yeah, I can see a bit of Ustinov about you as well. Alex, lovely to see you, otherwise known as Alex Hercule Poirot Morris, CEO and CIO at FM Investments. I just chucked in Columbo because I just like the catchphrase. And just one more thing. Anyway, there you go. You?
Alex was a good sport. Well, Columbo's from
Marple on you.
Columbo's from 1968. I had to Google it while you were asking. So.
Oh, I forgot you don't understand any US cultural reference before 1999. I forget. I apologize. I'll tell you about Greece later. Okay, let's move on.
Moving on for sure. For more on how markets are digesting the Fed dot plot, including where President Trump dot would fall, check out the website, CNBC.com. Coming up on the show, President Trump gets the royal treatment on the first day of his UK state visit before turning to more serious affairs today. We'll be crossing live to Ritica in Windsor. Plus, the Continental spin-off, Amovio, lists in Frankfurt, will be across the bell, ringing at the market open and those first few trades. And we'll dig into the UK outlook for Legal & General with CEO Antonio Simoes. That's coming up at 7:30 London time. Welcome back to Squawk Box Europe. U.S. President Donald Trump was indulged with pomp and ceremony on the first day of his UK state visit, soaking up a series of ceremonies and a carriage procession with King Charles before capping the day with a lavish state banquet at Windsor Castle. The guest list read like a who's who of British royalty and politics alongside American business, with Trump seated next to Princess of Wales Kate Middleton, Prime Minister Keir Starmer sat next to Blackstone boss Steve Schwarzman, and King Charles next to U.S. Secretary of State Marco Rubio. Also attending, Apple's Tim Cook, Jensen Huang of NVIDIA, OpenAI CEO Sam Altman, and Citi boss Jane Fraser.
Can I ask a question? Why do we call her Kate Middleton? How many women do we know who take on another name, a surname, whether it's Windsor or whatever, and then take on a title as well? We call them by their maiden name. Why is she Kate Middleton still?
Steve, you're asking an American here to weigh in on hundreds of years,
the director just said
thousands of
women's
years.
rights, which may well be the case. It may well be the answer.
I think
Why do we
it's
still call
actually
her Kate
precedent.
Middleton?
I think it's precedent within the royal family formality because, I mean,
We don't call her Camilla Parker. We don't call the Queen Camilla Parker Bowles, do we?
I didn't want to take it here, but Meghan, formerly known as Meghan Markle, she is taken on Sussex, but that's atypical.
So the Queen,
usually that's not the surname.
Queen Camilla, not Queen Camilla Parker Bowles. Meghan Markle, not Markle, Sussex.
But it's Sussex. That was unconventional to take on Sussex as the surname.
I just wondered.
I can't believe that I was pulled into that debate.
Just asking for a friend.
Okay, back to the news. The U.S. president hailed the history and special relationship of the two nations.
We're joined by history and fate, and by love and language, and by transcendent ties of culture, tradition, ancestry, and destiny. We're like two notes in one chord, or two verses of the same poem, each beautiful on its own, but really meant to be played together. The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable.
Attention now turns to more serious matters as Trump prepares to travel to the Prime Minister's residence at Chequers today. There he will join a business roundtable hosted by Chancellor Rachel Reeves. Trump's visit has been marked by a series of multi-billion-pound deals, the biggest of which was announced just last night, with Blackstone pledging £90 billion over the next decade. In addition, Prologis committed almost £4 billion into life sciences and logistics hubs, and Palantir pledged £1.5 billion in UK defense innovation. Now that adds to the major investments several big tech names announced ahead of the visit, with Microsoft, Alphabet, and Salesforce all unveiling multi-billion-dollar deals, with NVIDIA, OpenAI, and Nscale partnering together to create the UK's very own Stargate AI infrastructure project. Well, Ritika has been tracking it all for us, and she joins us now from beautiful Windsor. Ritika, an unbelievable roster of names at the state banquet last night. Did things go off without a hitch?
It seems so. All that pomp and ceremony certainly has been extravagant, and you can see here it's a fairy tale setting here at Windsor Castle. I'm standing outside Henry VIII Gate for the second unprecedented state visit for US President Donald Trump. He stayed here at Windsor Castle overnight, a guest of King Charles. They really have been rolling out the red carpet for him. It's everything from a carriage ride to military honours and the state banquet last night. Today, the president will be off to Chequers to meet with British Prime Minister Starmer at his country residence, where bilateral talks will begin, because beyond all the pomp and ceremony, the objective here is much bigger. It is to get all that business and investment into the UK, and also importantly to keep Donald Trump on side. The UK government has touted a record $205 billion worth of deals so far on this state visit from the US. We've already seen a host of them in the run-up, everything from a nuclear pact to tech, and about 40 or so coming the tech space. Blackstone also providing a majority of capital there, with a commitment of $120 billion. Trump, as we know, has arrived with a delegation of CEOs, everyone from NVIDIA's Jensen Huang to OpenAI's Sam Altman, and the CEOs of Blackstone. They were all at the state banquet last night. This should all be welcome news for the UK Chancellor of the Exchequer, Rachel Reeves, who has really struggled to revive growth here in the UK, and the government. These investments could of 7,600 across the country, but the timing still couldn't be any worse for Keir Starmer. We know he just his ambassador to the US, Mandelson, and there's no doubt that this meeting, of course, is controversial politically. There have been protests here upon his arrival. People are upset over everything from his stance on geopolitics, what's happening in Russia, Ukraine, the Middle East, Jeffrey Epstein, one of which that none of the parties here will be wishing to address in that press conference.
Ritika, excellent coverage. Thank you very much indeed. And apologies to our viewers for a slight bit of interference on the line there. As you can imagine, there's hundreds of crews down there and they're all trying to use the same phone line. So brilliant. Thank you very much indeed for that. I was actually on the streets pretty much doing Ritika's job when Trump was over last time round. And one thing I noticed, the protests were absolutely enormous, both outside the US ambassador's residence in Regent's Park and on the streets of London, and I was kind of in quite a melee. Now, whilst I understand that there was a lot of protests yesterday, the fact that the security protocol had taken Trump to Windsor rather than central London, which is much easier to control for the security forces, and we've seen some great packages on that as well, and commentary on the security operation, it's kind of dented the ardour perhaps of some of those protests when the object of it is actually a different place.
I think that was the whole point of the logistics management of this whole thing, even the carriage ride.
WEF in Davos, because it's really hard.
Impossible to get there.
Yeah,
but they're making their way to Davos. I mean, you have noted over the last couple of years when you're there. I mean, they have found a way. But I think when you look at the carriage ride, yes, it was extraordinary and full of ornate and ceremony, but in a very curated environment. So I don't think we got a real sense of how the public might be reacting given the lack of access. But I think I just can't get over how many names showed up at the state banquet last night.
Yeah, and Steve Schwarzman, despite his water problems, I should explain to viewers who weren't watching yesterday, he had his water turned off by the local authority because he tried to ship in thousands of tons of water for his own estate, but he was paying for the water and doing it legally, so I don't know what's going on there. But Schwarzman was there anyway, which is good to know because they are putting a lot of money into the United Kingdom.